Is it too late to buy eVTOL stocks? In this episode, I'm going to unlock some investing opportunities in the urban air mobility sector. So stick around and watch the full episode if you can. So in this episode, we are going to look at what is eVTOL, why the buzz, the eVTOL market landscape, the key drivers of growth, leading eVTOL stock players, opportunities and risks, investment considerations, and market outlook. Before we get into the video, if you haven't subscribed, please subscribe to my channel as it will motivate me to keep the high quality videos and educational materials in the stock market. Here's my bio. I'm a chartered accountant and working as a finance manager for Amco. Previously, I was a senior analyst at Deloitte. And I have put my disclaimer here as anything I say is not a financial advice. So what is eVTOL? eVTOL stands for Electric Vertical Takeoff and Landing Aircraft. This is designed for short to medium range flights, primarily focusing on urban and regional air mobility. This requires no runway and very quiet compared to helicopters and aeroplanes. The key features of eVTOL is electric propulsion, vertical flight capabilities, that means it can take off vertically and land vertically. Quiet operations, so in urban areas it doesn't create noise pollution, and potentially low emissions because this doesn't require fossil fuel to operate. It's electric, like electric cars. This is powered by battery operated electric motors, not by fossil fuel like other aircrafts. So what's fueling the flight? Obviously, the first one is technology, because there are technological breakthroughs in battery density with the increased focus in electrical vehicles and other electric-based equipments. Obviously, electric propulsion and autonomous systems like autopilots are making eVTOLs commercially viable. Second one is regulation. Agencies like the FAA stands for Federal Aviation Administration, and the EASA, European Union Aviation Safety Agency, are establishing clear certification paths, and this reduces the uncertainty for eVTOL manufacturers. And the third one is urbanization. Of course, we have growing city populations, which creates immense traffic congestions in cities, and there's a need for fast alternative modes of transport. And finally, the sustainability initiatives. There's a global push for green initiatives and zero emission travels. This perfectly aligns with eVTOL technology. This video is as per Joby Aviation website. As you can see, from downtown heliport to JFK airport, it only takes 7 minutes by Joby Aviation eVTOL flight, but it takes 49 minutes by car, reducing the travel time significantly. So let's size up the opportunity here. The market capitalization of eVTOL sector was approximately 2.1 billion in 2024, and it is expected the compound annual growth rate would be 54.9%, which will yield around $170 billion in market cap by 2034, within 10 years. So the eVTOL market is forecast to experience exponential growth as technology matures and regulatory pathway clear, moving from early stage valuation to a massive commercial industry. Basically, the primary application here is passenger air taxis, but the demand is there in logistics, emergency services, and defense, and this provides significant diversification and growth potential. So who are the key players and what's their stock performance? The first one is Joby Aviation. The second one is Archer Aviation. Third one is EHang Holdings based in China. And the fourth one is Vertical Aerospace. Now let's look at each of these stocks in details. The first one is Joby Aviation. Joby Aviation is a leader in FAA certification, developing a 5-seater air taxi for commercial launch in 2026 or early 2027. The key partners include Toyota, Delta Airlines, and Uber. And in terms of certification status, Joby Aviation is in advanced stages with FAA. 4 out of the 5 stages has already been completed by mid 2025. Recent developments include expanding its manufacturing capacity in the US and extending its commercial operations target market to Dubai and Japan. From an investment angle, Joby Aviation has a strong progression in certification, and obviously it has key partners backing them strategically. We will look at Joby Aviation in details in the coming slides. Next one is Archer Aviation. Archer Aviation is developing its aircraft called Midnight, and it is aiming for commercial services by the end of 2025 with strong global partnerships. The key partners are United Airlines, Stellantis, and Palantir. In terms of certification status and recent developments, Archer is actively progressing through FAA certification and conducting international test flights. And it is on track to deliver first aircraft to United Arab Emirates, and it is aiming to operate in Abu Dhabi soon. Archer Aviation has also completed 850 million stock offering, and it has improved its liquidity significantly. Archer also has an AI partnership with Palantir. From an investment angle, it has aggressive commercialization plans and strong financial backing, and obviously it has international expansion to UAE and beyond. The third one is eHang Holdings. This is a Chinese company focusing on fully autonomous pilotless eVTOLs. In terms of recent developments, it has world's first CAAC certification. CAAC means Civil Aviation Administration of China, and eHang Holdings has completed its world's first CAAC certification for pilotless passenger operations. eHang Holding also has launched its aircraft called EH216S with enhanced battery swapping. From an investment angle, of course, eHang Holding has the first mover advantage in autonomous flights and strong position in China's market. We have few other players as well. Let's look at them quickly. First one is Vertical Aerospace. This is based in the UK but listed in New York Stock Exchange, and the stock symbol is eVTOL. Basically, Vertical Aerospace is aiming to be leading supplier of eVTOL aircraft, and it is developing its VX4 aircraft. Recent developments include expanding leadership team and developing a hybrid electric variant for defense and logistics. And Vertical Aerospace expanded its partnership with the company called Honeywell. From an investment angle, Vertical Aerospace focuses on diverse applications and strategic partnerships. There is another one called Lilium. It is listed in Nasdaq and the stock symbol is LILM. Lilium is a German company, and it is developing a jet-powered eVTOL for high-speed regional air mobility. From an investment angle, unique design approach, focus on longer-range missions. Another one is Eve Holding. Again, this is listed in New York Stock Exchange, and the stock symbol is EVEX. So this comes from Brazilian aerospace giant Embraer, and it has large order pipeline with letters of intent. Recent development includes growing backlog of letters of intent and a strategic collaboration with Embraer X for vertiport networks. Vertiport basically means a dedicated infrastructure facility or location designed for takeoff and landing of vertical aircrafts like eVTOLs and drones. From an investment angle, Eve Holding has strong backing from an established aerospace company because Emperor is a very well established aerospace company. Let's look at investing beyond the pure players. Of course, for investors who are seeking low risk exposure, there are established aerospace and technology giants who provide a gateway to eVTOL ecosystem through investments, partnership, and supplying critical components. Boeing is the first one. Boeing has indirect investment in Wisk Aerospace. Wisk Aerospace is another autonomous eVTOL developer. And Emperor, we discussed earlier that Emperor directly invested in its subsidiary Eve Holdings. And the next one is Textron. Textron is developing its own eVTOL through its eAviation division. When you look at critical tech suppliers, Honeywell, of course, Honeywell is the key supplier of avionics and flight control systems. And Amprius is the innovator in high density battery technology. When it comes to eVTOL ecosystem platforms, Blade Air Mobility, So Blade Air Mobility platform positioned to integrate eVTOLs into its services, but Joby Aviation has recently bought Blade Air Mobility. So how do we navigate through the turbulence of risk versus rewards? When it comes to rewards, high growth, of course, if you invest, there's a potential you are investing in a transformative multi-billion-dollar industry at an early stage. And first move advantage, companies achieving early certification could dominate the market. Joby Aviation and Archer Aviation is well placed to achieve this. Diversified applications, obviously revenue streams comes from air taxis, but it can also come from cargo, defense and EMS, emergency medical service. Cost efficiency, apparently the eVTOLs are projected to operate at a lower cost than helicopters and aircrafts. When it comes to risks, regulatory hurdles, certification is a complex process and lengthy process with no guarantee of success or timing. Next risk is high capital burn. Most of these companies are pre-revenue and require immense funding to reach commercialization. And this means they could issue new shares to existing investors or new investors, and this could end up diluting the current investment. But again, in the long term, if the companies are successful, this wouldn't be a bigger problem. Next risk is infrastructure and adoption. Of course, the success depends on building costly vertiports and gaining public trust in safety, because people wouldn't travel in an unsafe aircraft. And the other risk is intense competition. Of course, it's a crowded field. So many players are developing eVTOLs, and some players might end up failing or be acquired by other big companies. If you plan to invest, what needs to be your plan? Of course, the first one is do your own research. Investigate about the technology, the leadership team, and the financials for each company. Think long term, because this is a highly volatile sector, and be prepared for multi-year investment horizon. You will also have to monitor milestones like FAA certification, because FAA or EASA certification can be the single most important catalyst. And if you end up investing, I would suggest you subscribe to the company's newsletter so you can get the information on time. Assess financial runway. Of course, evaluate cash on hand versus burn rate. You have to make a decision on whether they can survive until the revenue starts flowing in. Know your risk tolerance as well, because eVTOL stocks are high risk, high reward stocks, and you should invest accordingly and consider diversification. Now let's go to the latest quarterly results from the two largest players, Archer Aviation and Joby Aviation, and find out what that tells us. Let's look at Joby Aviation first. Joby Aviation's latest quarterly results were released on 6th of August 2025, and it received mixed feedback, primarily driven by significant miss on financial forecast despite continued operational progress. Let's look at financial performance first. Revenue and EPS miss. The company reported a substantial earning miss with an EPS of negative 41 cents against a forecast of negative 19 cents. Revenue also fell short, coming in at $20,000 compared to an estimated 1.57 million. So that's a big miss. Net loss soared 163% year over year to $325 million, which includes a significant non-cash revaluation of warrants and other investments. Cash position. Joby had a strong cash position though. The company ended the quarter with a strong cash balance of $991 million. Its cash burn for the quarter was $112 million, a 10% reduction from the previous quarter. With this cash burn rate of $112 million, Joby can continue operating for the next nearly 9 quarters without generating any revenue. And the expectation here is that Joby will be able to generate revenue in the next year or so. Let's look at operational progress. While financial results were disappointing, the company highlighted several key operational achievements. FAA certification, as we discussed earlier, the company advanced to stage 4 of the Federal Aviation Administration's certification, reportedly 70% complete on Joby's side and over 50% on the FAA side, marking meaningful regulatory progress. Dubai flight testing. the company completed 21 full transition flights in Dubai to validate its commercial readiness in real-world conditions. Strategic partnerships and acquisitions. Joby announced a new collaboration with L3 Harris to develop a hybrid variant of its aircraft for defense applications. Joby announced a 125 million acquisitions of Blade's passenger operations, aiming to fast-track market entry with an existing customer base and infrastructure in New York City and Southern Europe. The company is expanding in Japan, including demo flights at Expo 2025 Osaka. When it comes to manufacturing, expansion of manufacturing facilities continues, with the California site now capable of 24 aircraft per year and Dayton, Ohio plant ramping up toward 500 per year. Let's look at how the market reacted and what the analyst's reaction was. Stock performance. The stock reacted negatively to the earning miss, with shares falling. However, some analysts and investors note that the stock prices often moves more on regulatory and operational milestones rather than financial results, especially given its pre-revenue stage. Analyst downgrades. At least 2 analysts downgraded Joby stock, citing its high valuation and recent run-up in its stock price, because at the time of the results, Joby stock was trading around $20, and at that time the stock valuation is considered high, with some analysts pointing out that its market cap is greater than well-established airlines like American Airlines and Southwest Airlines, despite its lack of meaningful revenue. Of course, as I said earlier, this is a high-risk, high-reward stock. While there's a lot of excitement and potential in the eVTOL market, the company still faces significant hurdles in scaling production and achieving profitability. Let's look at Arch Aviation's latest quarterly results, which was released on 11th of August 2025. First, look at financial performance. Earnings miss. Obviously, Arch reported a wider than expected net loss per share of negative 36 cents, missing the analyst forecast of negative 25 cents. This was a significant negative earnings surprise. Net loss. The loss was 206 million, with R&D expenses at 122 million. This R&D expense basically reflects the company's heavy investment in development and manufacturing. Strong cash position. Archer has a robust liquidity position with 1.7 billion in cash and cash equivalents, and this was boosted by an 850 million capital raise Archer did recently. This provides a strong runway for future operations and investments for Archer. Let's look at operational progress. Despite the financial miss, Archer highlighted several major operational achievements that are critical to its long-term strategy. Production ramp up. The company is making significant progress in manufacturing, with 6 Midnight aircraft currently in production and 3 in final assembly. You can see a picture here. This picture is actually Archer's Midnight aircraft. UAE launch. Archer delivered its first Midnight aircraft to UAE and began flight testing in Abu Dhabi. The company expects to receive initial commercial payments later this year. LA 28 Olympic Partnership. Archer was selected as the official air taxi provider for the LA 2028 Olympic Games. This is seen as a major strategic win that will help align federal and local stakeholders for its certification and commercial launch. Defense programs expansion. The company accelerated its defense program with 2 strategic acquisitions, a patent portfolio from OVAIR and specialized defense composite manufacturing assets from Mission Critical Composites. Let's look at how market reacted and what analysts say. Mixed stock performance. The stock initially reacted negatively to the earnings miss, but then recovered slightly, and as of today it's not much different to what was it trading at the time of the results released. Positive analyst ratings. The consensus among analysts remains a moderate buy with an average price target of around $13.43. Analysts acknowledge the high risk nature of the stock but are optimistic about the company's strategic partnerships, strong cash balance and progress towards FAA certification. Just like Joby, Arch is also a high risk, high reward profile. While the company is not yet generating significant revenue and faces ongoing financial challenges, its operational progress and strategic positioning in the emerging eVTOL market are seen as strong indicators of future potential. That's the end of this video. Thanks for watching. If you haven't already, please subscribe. And if you liked this video, please click on the like button and share with your friends and family. Thank you.